Hello and welcome to A-Team Group's webinar on an agile approach to investment management platforms for private markets and a total portfolio view. My name's Sarah Underwood. I'm a contributing editor here at A-Team and I'll be moderating today's webinar. Before we get started, I'd like to share with you some events we have coming up that you can see and sign up for at the bottom of the page that you're looking at. Next week, June 17th, we'll be hosting a webinar that will consider whether financial institutions are making the most of business-critical structured data on their mainframes. Next day, indeed, on June 18th, we'll be hosting another webinar which will talk about mastering data lineage for risk, compliance, and AI governance. Finally, we'd like to invite you to join our June the 26th AI in Capital Markets Summit in New York City. You can register for all those things using the buttons on your screen or on our website. So look forward to seeing you at some of those. Okay, let's press on with today's webinar. Our expert speakers today are Neil Naidu, Head of IMP Product Development at Rhymes Technologies, Gurpreet Singh, Global Head of Data and Analytics at Partners Capital, and Catherine Boulemont, Founder and Director at Black Robin Group. I'll ask them to introduce themselves in just a moment and tell you a little bit about their work. But first, just a couple of tips and hints for you to make the most of the webinar. To the right of your screen, you'll see two panels. It's a Slido panel. One has poll questions. We're going to be running 4 poll questions today. So do please take part so that we engage industry interest and where you are on this journey in private markets. The other panel is for your questions, so please post those whenever you want to during the webinar. We'll gather them together and make sure that we answer as many of them as possible, certainly before we end the webinar. Okay, certainly enough of me as well, and let me come to our speakers. So Neil, please introduce yourself and tell us a little bit about your interest here.
Thank you very much, Sarah. It's lovely to be here today. As I mentioned, my name is Neil Naidu. I'm accountable for the investment management platform at Rhymes Technologies. Our primary product focus is to help our clients deal with complex investment challenges across exposure management, implementing cross-asset allocation strategies, and also with providing them with the tools and capabilities to perform rebalancing of complex portfolios a lot more systematically than they have been able to do in the past.
Fantastic, thank you. And Gurpreet, over to you.
Thank you, Sarah. I'm very happy to be here. Good morning and good afternoon, depending on wherever you are in the world. And my name is Gurpreet Singh. I work for Partners Capital. Let me give you a little bit info about what we do. So Partners Capital, we have around 60 billion assets under management. We are an outsourced investment office. We work with high net worth individuals and families and a number of charities and endowments, and we manage their investment portfolio. I'm responsible for data governance, data quality, market data, analytics, and AI. Anything related to data I cover over here.
That's a big job. Okay, thank you very much. And over to you, Catherine.
Hello, everyone. Thank you, Sarah, for having me today with you. I'm the founder of Black Robin Group, an investment management and advisory boutique with core expertise in niche credit markets. We help investment teams design better ways to manage their portfolios, especially when it comes to private markets. We focus on making systems, data, and processes work together so that investors can see the full picture and make decisions with confidence.
Sounds good. So plenty of expertise in the room, and I'm sure we're going to have a good webinar today. But let's get started with a poll question. It asks, to what extent has your organization modernized its systems and data management to meet increasing customer demand for investment in private markets? While you give that some thoughts, and I don't think it'll be very difficult, let me come over to Neil and how he sees the state of play on technology implementation and data management across private market institutions. Neil, when you're out and about, what are you seeing?
Yeah, the thing that customers are always very clear about is everyone is very, very focused on operating with greater scale, with greater efficiency, and in a much more model-driven and systematic way. And I think, with that ambition in mind, they have made and continue to make investments in lots of different kinds of solutions. So the market is in a very transitionary phase where there is investment going into very direct and specific value creators for specific kinds of problems. And there seems to be a one-to-one relationship with some of those investment cases. And then in other contexts, clients are adopting platforms and vendor solutions that more broadly suit the class of problem that they're looking to solve. Now, what makes this challenging, and I think what makes it difficult for clients, is that you have to make this work with your existing business processes and the way your organization has been working for a very long time. And so the pace of change offers great opportunity, but also provides a lot of challenge. And so unlocking those silos and getting those Excel-based models to work together with some of this new front-of-curve technology solutions is the challenge. It is that transition between how you have been operating and how you create value to how you want to be operating, on the 2 to 5 year horizon.
Okay, thank you. Excellent. And Catherine, what would you like to add there from the perspective of actually building and using these things and making sure it works properly?
Yeah, I would say that technology adoption in private market is improving, but it's still uneven. So you have large firms like BlackRock that use integrated platforms like Aladdin and eFront, and that gives them a strong grip on data and risks. Smaller or mid-sized institutions often rely on fragmented systems, spreadsheets and manual workarounds. Many are still in transition, modernizing slowly as demand grows for better transparency, reporting, and integration.
Okay, that's great. Thank you very much indeed. All things that we will talk about later on during the webinar. But let's have a look at where our audience is with this. So maybe see the poll results. Neil, would you like to comment on that? To a good extent, sounds good. And to a great extent. So is that the sort of thing you're seeing, that people are really having a go at this?
Well, look, I'm surprised by that, but I'm also pleased to hear that, because I think that lends credibility to the continued investment case in investing in data processes and data systems. And certainly the market has a greater choice than ever in solving some of these data problems. But the market and our clients are still under this big macro pressure, and I would put them on sort of two spectrums, right? There is the latency of getting this accurate picture that you want to make decisions on, and then there is the accuracy of the picture that you're making decisions on. And unfortunately, the right place is somewhere between them, because we have a lot of external influences that we need to consider to make decisions, but we also can't be waiting 90 days to be able to calculate NAVs in order to make an investment or portfolio rebalance decision. So I think really the challenge is between those 2 points of balancing latency and accuracy when it comes to performance, risk, attribution, customer demand.
Okay, that was my next question, staying with you, Neil. So let's sum that one up again. Not sum up necessarily, the challenges these kinds of sets up, as you say, in terms of performance, risk, attribution, and customer demand. Can you be a bit more specific about the kind of problems these kind of setups, which are not perfect yet and never will be,
Yes.
what kind of challenges they present on the business side there?
Yeah, I think when considering the information you would use to rebalance your portfolio, reshape your risk, or adjust your asset allocation strategy, the thing that clients struggle with is, when do they do that? And so they want to have as timely a representation of what is my state of affairs. Have I got my total portfolio view at a level that allows me to confidently make this decision? And then the flip side to that is, against that accuracy is how quickly can they get to that point? So balancing that trade-off between latency and accuracy is ultimately the quest for many of the institutions. And I think it will be very personalized depending on the kinds of strategies and the kinds of investment products that clients are looking to bring to market.
And that will help them deliver best on performance, risk, attribution, and so on.
Correct. Yeah.
Yeah. Okay, lovely. Okay, let's run another poll question here. And this one is, what are the systems and data challenges of meeting customer demand for investment in private markets at your organization? There's a little list here for you, and you can tick as many of the boxes as are appropriate at your organization. So while you do that, let me come to Catherine to talk about the kind of process systems and data pain points that create the challenges of some setups. You know, where are the problems?
Well, Sarah, a few come up again and again. In processes, it's manual workflows, i.e. emailing Excel files, updating PDF, which create delays and errors. In systems, often you have private and public assets that are managed on separate platforms with no common view between both asset classes. And with regard to data, unfortunately, there is no industry standards for private asset data. So capital calls, distributions, and valuation often arrive in unstructured formats, and the data must be cleaned and re-entered multiple times.
Okay. Neil, what do you see there as the pain points?
Yeah, I would agree with Catherine. I think that lack of standardization piece is a key one. And I think that lack of standardization comes from the fact that a lot of content in the private space is generally geared towards a human consumer. And the moment it is geared towards a human consumer, it is less tabular, it is less structured. And as a result, it poses significant challenges in terms of both data extraction and also trying to understand and infer from the information presented, what is actually valuable. So I think, that as a founding data challenge is incredibly important to clients in finding solutions to be able to do that. Again, the content formats, so PDFs and the processes by which we're extracting data from those, also incredibly challenging. And clients have the same ambition to try and find a scalable solution to bring all of that messiness into something that is clean and, I guess, executable when it comes to their business flows.
Okay, that's great. Thank you both. And Catherine, perhaps you'd like to comment on the poll results. May we see those, please? I think it's along the lines of what you were talking about. Yeah, there you go. What do you reckon to that? What you might expect? Data silos are a big problem.
Data silos and how to make the data comparable and like for like. Yeah.
Okay. Thank you very much indeed. And let's move on and bringing in Gurpreet. Please, would you explain, Gurpreet, from an investor perspective, the drivers of adding markets to portfolios?
Yeah, sure. So from investment perspective, right, we invest in both public markets and private markets, and we invest through fund managers, most of our case, rather than directly investing in the market. And the reason a big portion of our portfolio, clients' portfolio, is invested in the private market because that's where two reasons. One, we get enhanced returns, and that could be because we get premium for illiquidity for a longer period of time in private market, but also can get access to innovation that you probably won't get, early access to innovation that's going on, you won't get in the public market. Also on the diversification, because public markets provide us that different correlation to public markets, and if the market sentiment has gone down, the private markets are generally does not go down with that. That's the main reason we focus a large portion of our portfolio into private markets.
Okay, Catherine, what would you add there? Why do you see your clients coming to invest in private markets?
I agree absolutely. So investors are looking for returns and diversification, and public markets are often seen as crowded and volatile. In contrast, private markets offer different return drivers, usually with the optimization of the long-term value of a business. But unfortunately, that comes with complexity, especially in data and liquidity management. And I'll give you an example. So in the UK, for example, now we have long-term asset funds, the LTAF, which are UK authorized vehicles with a focus on long-dated liquid assets. And I'll take the main one because I've quoted them, but it's not an endorsement. So BlackRock has one, which is called the BlackRock Diversified Alternative Strategies, and it's designed primarily for UK defined contribution pension schemes and suitable retail investors. In that fund, they allocate across multiple private asset classes, including infrastructure, private credit, private equity, real estate, and venture capital. And in order to monitor and to have a comprehensive portfolio view across all these asset classes, they use their own proprietary Aladdin and eFront. Yeah.
Okay, thank you very much. And staying with you, what types of approaches can investment managers take to meet these existing requirements, and also obviously the growing demand for more investment in private markets? How can they approach this?
They can do several things. They can adopt a modern data platform, which handle both illiquid assets and non-standard data. They can create a total portfolio view, which integrates private and public assets into one risk performance framework. They can use workflow automation. We mentioned already the use of spreadsheets and things like that, which are prone to errors. But if they automate the workflow, it does reduce manual data entry and it streamlines the reporting. And last but not least, they can leverage partnership with their technology providers. So in this call, we have Rhymes, but you have also other providers such as Alview or BlackRock's eFront. And all these providers will help investors to modernize their infrastructure without having to build from scratch.
Okay. Gurpreet, what would you say there in terms of approaches to resolving the problems and keeping going through growth and so on?
So from our perspective, we pride ourselves that we work with small number of customers and we provide very bespoke services. But that doesn't mean that our operations can't be more efficient. So what we have spent a lot of time and energy, and we're going through a large scale of transformation. So our reference data, both from client and management, fund managers that we invest in, is managed in a strong data management platform. We've gone through transformation where we have a single view of the portfolio across public and private markets. I think this small part of the business that's not on the platform, but that's the transformation we're going through. That has been working really well. I think there are two outstanding challenges. One was mentioned earlier by both Neil and Catherine, and we see that from as the other side of the business perspective too, is standardization. So we do get unstructured data, valuations, NAVs, capital calls, any fund manager you invest in. Most of them we send us that data in a unstructured format, and that used to be a huge pain 2-3 years ago because the processes were manual. We gone through a transformation to automate a lot of that using AI. Now we have Gen AI, so that we should be able to do it much faster. But I think my challenge has always been this is not a AI problem, it's a standardization problem because someone has this data in a structured format somewhere and they're creating a PDF out of that and sending us the PDF, and we're using like next generation AI to extract that data. The whole process sounds very inefficient. But
Okay.
that is a problem and continue. We'll have another problem which we have a good handle now is around data quality, right? Having accurate portfolio. Our investment team comes in the morning, making sure that they have accurate information in the portfolio from cash positions perspective.
Okay, Gurpreet, staying with you, that's this kind of approaches you take on a practical basis. There's an awful lot to do here, clearly. What data and analytics do institutions need to participate in real estate, private equity, hedge fund, alternative investment markets, and how best can this be sourced? That's a lot of data, more data coming in.
Yeah, so I think as probably was mentioned before, what's most crucial for us to manage our portfolio is your NAVs and exposures. That gives you a view of your core running the processes to manage that portfolio, and also capital calls, distribution calls, etc. A lot of that, as I mentioned before, we get that in an unstructured format, and some of that we don't get the full view. For example, if we are investing in a fund manager that they invest in the public market, we don't get underlying exposures. And that's one of the key things from internally for us to have a full exposure up to the underlying stock. But also a couple of our regulators also ask for that information. So that's the kind of data assets that we need for managing the core processes. But going beyond that, uh, if we want to use any kind of machine learnings or AI to actually make ourselves better in manager selections, we've, we've we explored the market to see whether we can get additional data sets about the fund managers that we invest in, like any team changes in their fund man and their any deals they are making, any who are the participants on those deals. We still don't have that a very good comprehensive data set, but that's something the industry needs to make sure that we can use more AI, more machine learning to help our manager selections better.
Okay, thank you. Catherine, what would you add there in terms of sourcing all the data you need to work in private markets?
Yeah, so I agree with Gurpreet. Investors need deal level and fund level data, such as commitment, capital calls, distributions, the NAVs. They also need the fee and waterfall calculations. That's quite useful. They also need benchmark data for performance comparison, and they need the risk and liquidity profile of their holdings. The sourcing usually involved a mix of documents coming straight from the fund managers, from fund administrators, and also from third-party data providers such as Preqin, Burgess, and Rhymes. And the sourcing can also come from internal systems, especially with regard to loan servicing, accounting, and CRMs. So multiple sources, lack of harmonization of data makes it very difficult to have a harmonized view of and a comprehensive portfolio view. Yeah.
Okay, thank you both very much indeed. And on that very topic, which we've mentioned in terms of the customer profile view, let's run a poll question here. It asks, what is the priority for creating a complete customer profile view at your organization? So our audience, please, would you choose your answer to that one? And while you do that, let me come to Neil to talk about the importance of creating a total customer portfolio view.
I think Catherine and Gurpreet hit on very, very important considerations. And, I just want to reiterate that. There are an ever-growing number of characteristics of the things in one's portfolio that are going from, optional and nice to have to just core necessity when it comes to managing that portfolio's risk and making investment decisions with those assets in that portfolio. So I think it's gone from being, why is it important to why is it necessary? Because it's incredibly difficult to make decisions about your portfolios any other way. And when we put that against, the large number of macro risks and features that these portfolios are exposed to, having a total portfolio view that is risk aware, that is liquidity sensitive, and that you're making decisions across, increasingly complex multi-asset components. There is no other reliable way of doing this other than by starting with a total portfolio view. And I think, Gurpreet alluded to this a little bit in terms of their transformation strategy and where they're focusing. When you have a total portfolio view, what you are giving your organization is the ability for the specialists to work on the bits of that portfolio with the latitude and with the freedom of tools to do the best possible job in terms of modeling it, in terms of creating the right characteristics that can then be fed back into the portfolio construction, risk management, risk and attribution process. So, I think the importance is growing steadily. I think it is becoming one of a few scalable ways to be able to manage portfolios of these kinds of complexities. And as the number of institutions that adopt this approach are more regulated and they take on, more sensitive investment management products and roles, the requirement from, fiduciary obligation, from regulatory reporting, from governmental entities in terms of how, state pensions are managed, the requirement to operate at a total portfolio view is going to increase in significance. So, we really see this as being one of the core tenets for how multi-asset life cycles are going to be handled in the coming days.
Okay, that's excellent. Thank you very much indeed. And Neil, perhaps you'd like to comment on the poll results. Could we see those, please? There you go.
Well, I'm glad.
Yeah, that look good to you?
Yeah,
Nobody hasn't got any plans. Some people are planning, but most understanding the need and working on it, I think, as you explained, yeah?
Yeah, and I think it ties back to some of the earlier poll results quite nicely, because if you are working on your data ecosystem, then I guess you've gotten this joke. You understand that really clean data, organizing that messy to clean, having and introducing elements of standardization is what is going to get you to this total portfolio view. So, I guess whilst the first one might have been a bit of a surprise, I think these two link quite well. It sounds like there is a lot of signal around where people are investing their time and energies.
Excellent. Thank you very much indeed. And let's run a final poll for today, and then we'll be all polled out, I think. But here we go. This one is, what are the top vendor system requirements your organization is looking for to manage private assets? Again, you can tick as many of the boxes as are relevant to your organization. And I think people will be ticking quite a number of these. So you carry on with that. And once again, let me come back to Neil, if I may, to talk about the types of data management platforms that can be implemented to monitor, assess, and provide intelligence across client portfolios to, help with the risk management performance and so on.
This is quite a hard question, because I think there is so much diversity in terms of the styles of the investment strategies. And I don't think there will be a single answer here, but I think there are some very core considerations. So modern platforms built on the cloud with modern APIs and telemetry, I think that's just the bare basics. And if you're able to pair that with an opinionated object model that is opinionated towards finance, because you get a lot of things for free when you model the stock, when you model the dividend, when you model the entity in the context of the financial services industry, because those things have meaning and they're very taxonomically relevant to creating investment decisions. So, I think when considering a data platform, I would urge everyone to consider the underlying data models that you get as part of that platform, and make sure that it also comes with an extensibility that allows you to then personalize that data model in a compliant way with the right level of guardrails and telemetry and reporting, that when you then take on the data management challenge and create that valuable data that your platforms are going to be running on, you're doing so in a way that allows it to fit flush with the organization that you already have. So you don't want to also trigger a massive transformation agenda that has to integrate with 500 other downstream systems. Those I think are the core considerations. Make sure that the data model is extensible. Make sure that you get a bunch of stuff for free because it's opinionated towards finance. I think that's really important. There's a lot of vernacular, a lot of peculiar concepts that don't exist in other industries, and focus on telemetry and governance and reporting to make sure that you can do this activity in a compliant way.
Okay, lovely. Catherine, in your experience, what are the most important elements here?
Well, usually the the platforms that are flexible, cloud-based, as Neil suggested, and built to handle both structured and unstructured data tend to work best. The key here is being able to ingest data from many sources and standardize it and then apply the analytics in real time. So some firms build their own, others use vendors. To give examples of vendors, so and again, this is not an endorsement, it's just an overview of what's out there. So as I mentioned before, there is eFront from BlackRock. That's designed for private markets, and it integrates with Aladdin for a full portfolio view. It covers deal sourcing, monitoring, accounting, LP portal, analytics, all in one suite. Then you have the All-View systems, which is widely used in private credit and fund management. It's a fully integrated private market ecosystem, and it covers front, middle, and back office operations. And it also has specialized modules for private debt, credit, and CLOs. You know, I mentioned before the waterfall and the fee calculation, so that's quite important for CLOs. There are also out there two systems called Chronograph and Adepar, and they both focus on performance reporting and LP analytics. Chronograph has Chronograph LP, which helps with the reporting across funds, co-investment, direct deals, and underlying holdings. And they also have what they call Chronograph GP, which automates the portfolio company data gathering, the valuations, the reporting, and the data warehousing. Adepar provides benchmarks across 12,000 funds managed by over 4,000 managers. That's about 115,000 LP positions. And they provide a bunch of metrics like the distribution to paid-in capital, the total value to paid-in capital, the IRR, the quartiles, the vintage year performance, etc., and so on. And of course, you have RIMES here with us that integrate and normalize data across asset classes. But you know, these are all the providers, and then you still need to visualize with a custom dashboard. And again, there are lots of providers there to help you with your dashboard and how to make sense of all this data that comes to your screen.
Okay. Coming back to you, if I may, Neil. Catherine's mentioned some of the providers. What does RIMES do here? What's special about what you do? Because I think it's a very integrated system.
Yeah, you know, the reason I make a big fuss about the object model is because, you know, that is our approach to the market, and the ability for our clients to accurately and reliably extend that data model is something that we have found to be quite powerful in the hands of our clients. And it's resulted in a number of successes in this space where very large asset owner type of institutions have been able to wrangle this problem. Now, we quest for progress over perfection because the industry is changing quite rapidly. The dependency on certain kinds of data is obviously, you know, changing as well as it becomes more structured and as there are more players that are allowing, you know, those data sources to be turned into pipelines. So, you know, our approach is to stay close to the way the data sources are evolving and making sure that we are being thoughtful about where we invest, both, you know, in our object model enhancements and being able to cater for the newer characteristics and features, but also with listening very closely to the client signal of how clients want to operate. Clients want to be more model driven. They want to adopt AI. They want to be more integrated in terms of their holistic management of their portfolios, but also have the ability to create specialist analytics. And so we're investing in and continue to support clients who've been successful in having done that and are pushing us to evolve our platform and to be able to support those kinds of needs.
Okay, fantastic. Let's see the poll results, if we may. Object models don't come into it as it happens, because I think I wrote those, not you, Neil. Do those things, Neil, we've just talked about, what do you think of those poll results? That are those things that you see as being very important?
Yeah, I think the custom built benchmarks for trafficking private assets is is the learning from public markets and the importance of being able to have comps and referenceable benchmarks when it comes to performance reporting and asserting, from a manager selection process and from an overall fund performance perspective, that you're doing the right things and you're investing with thoughtfulness. But I very much so I'm glad to see that the reliable data mastering and warehousing is also something that is high up on the list. I think those two really play to the real money importance in terms of the capital that is going after these private assets and the requirement to have the transparent benchmarks and the ability to provide reporting and governance telemetry to be able to do this well.
Okay, smashing. Thank you very much indeed. Let's take a break. We have some audience questions that I'd like to put to you. Catherine, coming to you with this first one, it says, we need to improve our technology and data structure to meet growing demand for investment in private markets. Where is a good place to start?
A good place to start? Well, I would say we need to figure out if they want an internal or external solution. So what is the legacy structure that they have? Is it better to start from scratch or to use that and go for an external vendor? And that's probably what I would suggest for now. Yeah.
Okay. On that one, Neil, what when you're out in the market and people saying, help, help, we're starting, but it's very difficult to get started on these kinds of projects, even if you start it, and you're going along. Well, where do you suggest they start, in the data or the infrastructure? How does that work?
I would really recommend a little bit of introspection first before deciding that you want to solve a problem. I think lots of institutions have a very core franchise identity. They have a very unique value proposition that they're looking to monetize. And I think what's really important for clients is you are at risk of diluting or following a trend for the purpose of solving a data problem if you don't first decide, actually, this is who we want to be, this is our value to our clients, and we want to invest long-term capital in that IP. That is the thing that should be an internal investment. And then to support that, if it is commoditized, if it is something that you can rent, start. Right? So start by renting it, start by engaging with partners, start by trialing and POCing to try and understand and collect information about how does this thing and the way it's done complement my high IP, high value to my clients. And that discovery process can take 3 weeks, it can take 3 months, it can sometimes take 3 years. But you do have to start that process because the thing that is always going to be there is the challenge that, you should outsource this, you should build this yourselves. So unless you're clear about your own internal IP and value proposition and what you're using to create value for your clients, you're always at the risk of diluting that. And so, when we have those conversations with clients, from a consultative perspective, that's where we start. It's like, what is it that you really want to achieve? Yeah. And how can we give you the right sequence of building blocks that help you get to a clear understanding of that, a clear formulation of that, and then ultimately solving that problem with scale?
Excellent. Thank you very much indeed. And Gurpreet, here's one for you. You mentioned AI and Gen AI earlier, and it says, is there a role here? I did think you said there is, but anyway, the question goes, is there a role for AI and generative AI here? And if so, where could it provide benefits?
Sure. I think Neil mentioned this too, related to infrastructure and data. Was same thing with AI. I think there's a trend that everyone is using Gen AI. What are we going to do about that? And we need to adopt AI, which probably is not the right approach. It needs to go back. What are the major problems you are trying to solve, and how AI can help with that? And to give our examples, in our case, the biggest problem, we discussed this before, we were trying to solve is huge amount of unstructured data. That data could be like operational data we discussed earlier, NAVs, capital calls, and information about that. It could be more qualitative data, right? What's our view of our fund managers on a market or a particular topic? That generally they produce that and provide to us in a unstructured format, and we no one has that mental capacity and physical capacity to absorb all of that information. And that's what I generally call it like we are creating, if you look at Iron Man, with is a human being with a suit. And if he just without a suit, he just behaves like a normal man. And with the suit, he can do amazing things. And we are trying to do is create that Iron Man suit for our analysts. We provide them a mental capacity that they can't have using generative AI. And that involves in looking at all of those unstructured data, finding insights from them, and giving that insight so they can do things much faster. And there are two aspects of that, which is making decisions better and making decisions faster. And you can help in both. We started with making decisions more faster and efficient, which is just get the information. And the next iteration of that would be using that information to actually make our decisions better. So that's on the investment side, and also on the operation side. We discussed this before. We used AI even before to extract operational information out of those documents. With Gen AI, we haven't tried it out, but whatever POCs we have done, it is much faster and much more accurate.
Is that your experience, Neil? Are you using AI in any way?
Yeah, I think the theme again is just the rapid pace of change. My advice about the adoption of AI is to pick your integration point thoughtfully. Whilst it is incredibly easy to build some of these POCs, when you have to then turn that into something that a business is built on, there is a cost and an opportunity cost that goes along with that. So I think an important consideration is if you partner with a provider, they are a specialist in that particular domain or that product, and you can get all of the benefits of a great product, plus their continued investment in it initially, without wedding yourself to direct integration pain and penalty. And I'm sure as Gabriel would have found, and I'd be interested to hear his views on this as well, is that you want to pick what you want to build, you want to pick what you want to rent, and you want to pick what you want to buy, because when you create these integration points and you build businesses on them, they're going to be there for a long time. And so, our approach is to try and be very thoughtful about what is it that we want to own, even as we use AI in our own business, and also try to provide AI capabilities to our clients. We want to give them, the best possible solutions, but also to make sure that those solutions are evergreen, so that we can continue to invest in it, that we get the benefit of the best models, and that we don't give them a brittle integration point.
Okay, fine. Coming back to you, Catherine, and this one asks, we've talked about outsourcing and outsourcing. This one asks, to what extent can institutions outsource some of the processes involved here? I think from your point of view as a practitioner, where do you see outsourcing as an advantage, and where would you definitely not outsource?
Well, it lies again to what expertise and technology advantage the investor has. Some funds are very technology savvy. They have very sophisticated data lakes with large pool of information. They know how to harmonize structured and unstructured data. So if it's a core IP of a company, then there's no need to outsource the API or the data solution. Yeah, so you can focus more on the infrastructure. If the core strength of the investor is infrastructure, but weakness on data, this is where maybe we need to go to data providers to bridge the gap. There's no one fit all solution. It all depends on their circumstances and really what they invest in, because the way they're going to look at real estate is different from infrastructure, which is different from private debt, which is different from private equity.
Yeah. Okay. One here for Gurpreet, and I hope this will work for you. Where are the overlaps and cost efficiencies for institutions working in both private and public markets, and how can they be achieved? Do you see that? Do you see some overlap in efficiency?
As a consumer of private markets and public markets, as an investor, I think there are efficiencies. So the way we run some of those processes are quite similar, but not in all the cases. So if you're looking at valuations, if you're looking at managing risk of our portfolio and attribution, we can merge that data together and bring it all in one view. And that kind of works a very similar way. But some of the core processes are quite different for private markets, like the values, the rhythm that they do, the valuations, or the long-term investment and the returns around it, which adds more complexity in our single portfolio view. And that's where we have to find a way to merge these two models together. So at the end of the day, we get that single view of the portfolio and we can manage risk across multi asset classes.
Okay, thank you. And last one for you, Neil. It has no answer, so I'll hand it over to you. And it asks, how do you see interest in private markets developing, and how will institutions need to respond?
I can see it growing, definitely in terms of, when we look at the investment products that are actually coming to market, and an interesting example is something like a target date fund. The target date fund, has a vintage. It has a particular objective in terms of the expectation of when someone is going to retire. It is like a little retirement fund in a box. And the requirement to manage that target date fund is, one, to dynamically rebalance that under this assumption that someone is reaching retirement. And the rebalancing requirements and the overall view on what goes into that portfolio mix changes from heavy risk on equities focused to slowly every day rebalancing towards something that is real asset based, income generating, and that matches the profile. We are seeing huge amounts of capital inflows into that class of product, and so those are the perfect homes for private assets because of their high quality income generating potential to do that asset liability matching or solve that asset liability matching problem. So as we see the market continue to innovate in those style of investments, the wrappers that contain private assets start to grow in diversity. And as there starts to become competition for the various forms of the private assets, you can only see their inclusion, their wrapping, their securitizing in some shape or form into other and additional products growing over time, which makes that total portfolio view and this clean view of the world that much more important, because you want to know in your fund of fund products, in your complex portfolio hierarchy, what am I actually long? What are the pockets of the things that I actually have? So I think, I think it's going to continue to grow. I think the interest in the other asset classes, Catherine mentioned private credit, the AUM chasing those kinds of return profiles. Lots of news articles around how it's growing, and at an incredible rate. So I think we're obliged to solve this problem well and ensure that it generalizes well across our client space.
Okay, thank you very much indeed. I think that's all we have time for today. So thank you to our audience for your questions and to our speakers for your answers. And for the last time, Neil, I'm going to bring you back. You mentioned examples earlier. Please, would you just talk us through an example of a use case where an institution is managing private markets data successfully?
Yeah, we have quite a good relationship with the asset owner community, and asset owners again charged with that very sensitive and important obligation of managing pensions and doing that asset liability matching process. That high quality asset payoff profile in terms of pension assets is a core focus for a particular asset owner client that we have. And using the combination of our data management suite and our extensible data model, that client is actually able to create this total portfolio view by aggregating a multitude of custodial views to have this high quality start of day view on their portfolios. And then using our extensible object model, they're able to personalize the representation of the various sources of data that they're collecting and aggregating and processing, ultimately to create this total portfolio view, so that when you go down to the security level, the last leaf on the tree, you're actually able to see very granular detail around the assets in your portfolio. That is an incredible efficiency creator, and it actually allows them to invest in greater detail in terms of their investment strategy, invest in research, and again, allows them to manage that portfolio significantly more dynamically than some of its peers.
Okay, thank you very much indeed. We have covered a lot of ground and talked about many things. So for my final item today, I'd like to ask all our speakers to offer some advice to practitioners working on investment management platforms for private markets. And Catherine, would you like to start here?
Yeah, sure. I would have, I would start by saying start with the outcome, not with the technology. I.e., what decisions need to be better supported. Second, I would recommend to standardize data inputs early, because if the source data is inconsistent, then the downstream systems will always struggle. And finally, I would recommend to bridge private and public views, because the true value will come when private markets are not isolated, i.e., when they are part of a bigger picture.
Okay, that's great. What advice would you offer?
I absolutely agree with Catherine. I think Neil also mentioned that start with the business outcome, what you're trying to solve, and what's the best solution for that. But in addition to that, two other things that people should think about. One is thinking about data integration as part of the platform. So all the information you're going to receive internally or externally, how does that flow into the system? What are the controls around it? The second thing is think about data quality as a process as part of the system, not as an afterthought. The biggest problem that I've seen in the industry people are facing is that we have a shiny platform, but the data getting into that platform is not accurate. And then we start thinking about how do we make sure that is accurate, and then so that the platform is useful. I think it should be thought about as part of the platform itself. There should be workflows, processes, accountability around data governance and data quality.
Okay, that's great. I love data. Okay, sorry. Neil, some final words from you.
Until I didn't expect the poll answer that everyone has already started, and that their data strategy is along the way, because my recommendation was going to be to start if you haven't. But I think now that we know that everyone has started, I would say continue. I think you learn a lot by actually tackling this problem. So my recommendation is to start, to iterate, pick a few things, do them well, and then focus on the scalability of your business. Have a very clear understanding of how your business could scale, and invest in those things early and often. Automate as much as you can, and really extract the learnings of hard problems, difficult problems, and then go to the street or to providers to help you solve hard problems well, and then continue to iterate. Chase progress over perfection. That is about the only way to stay in the business.
That's a lovely expression. I'll use that. Thank you. Progress over perfection. Excellent. Thank you very much indeed, Neil. And thank you to all our speakers for sharing their expertise and their experience with us. Thank you to RIMES for sponsoring today's webinar. Before we close up, just a quick reminder of some of the A-Team Group events I shared with you earlier that you can sign up for today. Next week, June 17, a webinar that will consider whether financial institutions are making the most of business critical structured data stored in mainframes. Next day, June 18th, another webinar looking at mastering data lineage for risk compliance and AI governance. And of course, that invitation open to all of you to join us on June the 26th at our AI and Capital Markets Summit in New York City. We've run one of these in London recently. It's been tremendously successful. So if you're able to join us, do please sign up. And I know the team will be pleased to see you. That said, that's it for today. So thank you again to Catherine, Neil and Gurpreet, and thank you to all of you who've taken part in the webinar. Please complete our feedback form as we are always keen to hear your views and improve our products. Meantime, thanks again and goodbye.
Thank you.
Thank you.